But today we are covering only the small part as a part of understanding of the corporate tax definition. So what is shown here, this is not will be covered, but as a legal reference, if you want to see, this is the legal reference is already shown. But taxable income as per Article 28 adjustment in the accounting profit. How many adjustment? 8 adjustment in the accounting profit. But we are starting from exempt income. So our topic is only the exempt income, the overview, the understanding. So what is the overview understanding? What is the first exempt income? The local dividend. The local dividend from UAE company. The UAE company means, let's say, is the I'm assuming that company A is, let's assume LLC or the natural person. Natural person, we are using the NP. Okay. So we are just understanding is invest in company B is LLC. What they did the investment. We are doing the investment for what? To get some reward, to some monetary compensation. So here we are saying they are getting the dividend. So this is, but key focus, this is the UAE company. The difference is very important. So far we're talking about the UAE company. And this is also UAE company or the natural person. If you invest here, let's say the 100K, and you getting the dividend of the 20K per annum. So we are saying this is subject, this is the exempt income. This is the exempt income. How it is exempt income? As per Article 22 of the CT law. Mostly participant and looking for, okay, we require the FTA or the tax law regulation, because all others training providers, webinars, they are seeing as per the legislation, but they are not sharing the reference. Don't worry, you will have all the reference, and even the link will be shared in the group also. And even I'm still available if you come across and say, okay, this is not available, but not to the all participants, the participants who are continuing with us and attend all the sessions, because this is important. If they're attending, they will learn and they will understand how it will be relevant, or it will be taken the extract from there. So only those participants, yes, I will have the interaction with them, and I can explain and I can give you further clarification and the discussion as well. Okay, the first part we learned, the local dividend income is exempt. Is exempt. There is other criteria, 5% and the minimum investment. In terms of the local dividend is irrelevant. It's not applicable. In terms of local dividend is not applicable. Of course, this criteria will be tested, but not here, because one of the participants in the previous training, he said, okay, so you mentioned that the dividend is exempt income. But here, the practically, when we going and checking, this is not exempt. So then I mentioned what you are checking. Either the local dividend, the word local is important because they didn't focus on the local. They've just focused on the dividend income. So this is the law. If one word is skipped, the understanding is wrong. Anyhow, the local dividend, I'm again repeating, is exempt. Okay. Then is a natural person. So let's understand the natural person example. Let me come back and complete this. That's all. Let's understand the in terms of the natural person, who are the exempt person. Natural person, we are saying the individual. Under the individual will be the out of scope. Okay. This will be continued. These are the 4 items. We will continue, but here additional part, the natural person. Under natural person, what are the information are covered as a out of scope person. So the natural person, if we talk about the individual are out of scope. Natural person, any person who's getting the wages and salary is not subject to tax. Here in UAE, there is no income tax. It is the corporate tax. Normally, we are giving the example of the UK taxation or tax regime. Yes, there is the income tax as well as the corporate tax, but in UAE is only the corporate tax. Even the individual is subject to tax on their business income for corporate tax, not on the income tax. So out of scope, if the person is getting salaries and wages, like mostly the expat working in UAE, they are getting salaries and wages. Yes, these are the out of scope. Next is a personal investment. What is the personal investment? Normally the expat, what they do investment, any kind of investment in property investment or shares. Shares, one of the common example. If we buy the shares, any shares like the Imar, like the Lulu, like the Salik. I'm giving the local example, but of course you can invest in any kind of the any stock exchange, Lulu's, Pennies, or any other. Okay. So this is your personal investment, and this is the out of scope. Now the next is the real estate. The real estate, if the same thing, real estate, if the property is under individual ownership, under individual ownership. Real estate under the individual ownership. Something is wrong. Okay, let's cover from here. This is the more detailed. Natural person, out of scope. Natural person have the income, out of scope income. Here the important, please understand that out of scope income. Natural person may have the taxable income and the out of scope income. So natural person out of scope income. What is the out of scope income? Wages and salary, personal investment, real estate. There is one more. Okay, we'll see which one is the next. The out of scope income. Here the important is the income. Here is the person. Out of scope individual may have the out of scope income, and some individual may be out of scope, means not subject to tax. So which are the person are out of scope? Natural person not doing business. If the natural person is not doing any business activity, is out of scope by default. The next is a natural person doing business. Natural person doing business, but revenue threshold is less than 1 million. Again, the threshold, sorry, the turnover threshold is less than 1 million. Now this turnover threshold calculation is very critical. This is the one in the beginning I given you the example, mostly people did the mistake. To calculate the revenue, to calculate the turnover, they did the mistake, and they given the benefit to the owner or to the natural person, but actually they did the mistake. Not all, but most of them. This error is happen. Anyhow, now we said the out of scope person, natural person not doing business, but now we are saying even natural person is doing the business, but his turnover revenue threshold is less than 1 million, is good. Now the next is the foreign PE election is made. Foreign PE, foreign permanent establishment. Like the UAE company, they have branch in the UK, like the US, like the any European country. So this is the once we say the foreign PE election made. Here the another point, election is made. We have the debate on the previous session. They said, okay, how come the foreign PE is a out of scope person? But again, when we are saying the election is made, yes, then it will be out of scope person. And the information I'm giving you very summarized way is not as easy. It's available in the tax laws. You have to study all the regulation, ministerial decision, cabinet decision, FTA guidelines, tax procedure law. Then you will able to reconcile the information. So I'm not saying rely on this. I'm just giving you the information and the educational purpose. You go dive and double check with that. Okay, some sort of, why we didn't some sort of out of scope person? Because because election is required for this. Here is no election by default. By default out of scope. By default out of scope. Next is non-resident person. Okay, without P, permanent establishment, we can say the branch, and without nexus. Without, here the word will be without nexus, not with, without nexus. So if the non-resident person, he don't have the PE and they don't have nexus, again, he's out of scope. Yes, but such people in future withholding tax will pay. What is currently withholding tax in UAE? 0%. But of course, in future, it will be subject to taxation. Okay, now the business. Here we understand the individual. Here we are understanding the business. Not automatically exempt, may require to apply for the exemption. As we seen in the previous case, certain people are exempt and certain we have to apply for the exemption. So now the next is here. The foreign investment, because this point is relevant over here. If we open the branch and investment, so but here the another important part, foreign investment, what benefit to have election? Subsidiary will not give you the profit, but here because subsidiary cannot fall over here. Why this point is written? Because PE, foreign PE, we saying the branch, or many other also, but here I'm saying the branch. But if the subsidiary is a separate person, separate legal person, this is the branch or extension of the parent company. So that's why they're saying if the foreign PE we have outside country and we can make the election, yes, it will be out of scope person. But commonly question is coming, yes, we have the subsidiary. Yes, the subsidiary is not here. Our discussion, we are saying the PE only, because subsidiary is giving us the dividend, rental income, interest income, royalty income, management fee, right? But the branches are giving profit or loss, either way. So that's why, and these branches subject to tax in the parent company, that in UAE. But the tax is saying if you made the election, it is not subject to tax. But of course, applicable, certain points are there. The next, the note is here mentioned because it is a key point to be discussed with you and share with you. Natural person or the unincorporated person, partner doing real estate activity without trade license through unincorporated partnership may not subject to city for personal investment or real estate income eligible for the real estate relief. This is the important point. We will discuss in detail natural person or unincorporated partnership. What is important here? Activity without trade license. If the natural person doing the real estate business without trade license under his own ownership or through the unincorporated partnership, okay, then he can take the advantage of the exemption or the out of scope. But if the same property owned under LLC, is subject to 9% straight. Of course, after you given the in workshop, they given the couple of examples to explain this concept, because the UAE market, they giving the advantage to the real estate industry and real estate investor. Now the same point, but natural person doing real estate activity through a trade license. What is the here? Or with trade license, not eligible for the relief, is subject to 9%. Here is eligible for the relief. Here is the out of scope or some other benefits they can take. I'll take the question, but let me complete our previous slide. One minute with me, the same slide, because the information. Okay, our topic was the exempt income. The exempt income, what we understand, the local dividend, we already understand in detail. If here the Article 23 of the city law for the local dividend, you might go and understand in the further detail. Okay, now the same exempt income, the next is what we mentioned, 4 item. Okay, participating interest holding. Normally we will use a common term PI, participating interest. Now the same, what is the participating interest? First we have to understand the participating interest. Mean the company or any natural person, they buy the shares. Same the example over there for the B company, LLC, let's say company A, investment. Now they made the investment. So local dividend is exempt, but now the participating interest, the further understanding, they made the investment in B, and what they will get? The dividend income. So how it will be dividend income? As a participating interest, they will get the dividend income. Local company dividend, not taxable, that we already discussed over there. Then the next is the foreign dividend income, because if we did the investment, so if the local company we already discussed is the exempt, but now the foreign dividend. The foreign dividend subject to further rules and regulation. What are the rules and regulation? If your investment is more than or equal to 5% or 4 million. Now, if we are getting dividend from the foreign company, like the UK company, so this dividend will be subject to this criteria, subject to this test. If it's meeting this test, then it will be exempt. Otherwise, it will be 9%. Foreign dividend income, foreign subsidiary company paid dividend to UAE company. Got it? Now, next. So when we do the investment, the two things will be there. One is the dividend and the second will be capital gain or loss, right? Here it will be in both. Capital gain is written, but loss also will be the same. So now we'll see how the capital gain and loss. Again, UAE company not applicable. What is not applicable? This test, the PI criteria is not applicable. Guys, oh, sorry, the slides is, Please let me know from which slide we skip that. From which slide we okay, slide, okay. Participating interest, okay, the second point, same. Okay, fine. Thank you. I appreciate some of the participants, they have my contact as well. If such thing happen, please let me know, because during the training, maybe I did not notice as much. So I believe now is available. So let's continue. Okay, so here the participating interest, we discussed what is the participating interest. This is the condition if we do the investment, and if we do the investment and meet this criteria, then it will be subject to exemption. Okay, but again, as a part of the investment, what will get dividend income? From dividend income, we might come from local company. When the local company is exempt, we don't have to check this criteria. The second income, if we did the investment in the foreign entity, in UK company, if we did the investment in UK company, it will be subject to the PI test. If simply we say, what is the PI test? We will cover in detail such things. Here, the minimum you made the investment is 5% or the more than 5%. What is that? You buy the shares 5% or more than 5% of the foreign company. Then dividend paid to UAE company is subject to exemption. This is the basic, but there is other regulation also there that we will dive into detail, and we'll cover this standalone topic with each and every aspect. Okay. Now the next is the capital gain. Capital gain or loss on sale of shares. If we sell the shares, it might be the gain, it might be the loss. So the UE local company shares, okay, if we sold the UE company shares, not applicable, means this test is not required. Is standalone because the other company is also UE company. This is already text in the other company. We don't have to test this criteria. But if the foreign company shares we sold, if the foreign company shares we sold, as an outcome, we might have the gain or loss. If we have the gain or loss, so that we have to see this criteria. I'll just mention the PI. I'll just mention the PI test. What is the PI test? 5% of the shares are the more or 4 million of the investment. On the next is the foreign exchange gain losses. Foreign exchange gain losses also under the PI criteria. What is the foreign exchange gain losses? Anybody in the from the participant would like to give the example of the foreign exchange gain losses? Anyone from today's session? When we are buying and selling currencies, currency differential rate. Yes, nice. But here I just want to mention, you did the investment. At the year end, the same investment what we made at the year end, if we convert into local currency, as the outcome, it will be exchange gain losses, right? The other example commonly we given, but here we talk about only the participating interest. The participating interest, the amount, if we invested in the USD or Euro, of course, the value at the each year end will be changed. There is other associate element also that we'll cover when we come in the exempt income and the PI. This is okay, but now the impairment gain and losses also subject to the participating interest income criteria. Let's see the next. The foreign permanent establishment exemption. What we said, the exempt income will be the 4, 1, 2. This is the our third one. Article 24 of the city law, foreign permanent establishment exemption. This is also, we just discussed before also how it will be exempt subject to the election. And if we made the election, it might be the exemption or the out of scope. Now here the foreign branch, here the same thing, the foreign branch, an election is made. Foreign investment, what benefit to have the election? If we make the branch election, it will be out of scope, not subject to tax income, but keep understand or ensure we are not discussing the subsidiary. We talk about the branch. If election is made, do not include foreign profit in the city. Now, here we talk about the election. Important is election is made or no. If is made, yes, do not include. Yes, of course, there is a further other criteria. If election is made for all the branches must be the made. If not, then we cannot make the other. Then if we do not make the election, we will put add into the profit and loss in the city computation. Now the fourth, the international transportation by the non-resident person. Here again, this non-residential person is very important. If we ignore the non-residential, the whole picture will be changed. Whole story will be changed. We've seen the common conversation discussion. Then we come up, they are not focusing on the non-resident. They're saying, okay, the international transportation, any company who's operating in the UAE, registered in the UAE, and they're doing the business in the UK, Europe, US, any part of the world, it's subject to tax. It's subject to the exemption. This is the common question. Why? Because they're saying the international transportation is the exempt income. So this is the very basic. Yes, international transportation may subject to the exempt income. May subject to exempt income. The first criteria is the non-resident person. The second criteria, reciprocity principle. Reciprocity principle means if the UK company or the like the Emirates airline, this is international transportation, right? If the UK British Airways is the UK company, they operate in the UAE, they're taking the flight from the UAE, but they are not registered. Likewise, Emirates Airline is a UAE company, is registered in UAE, but they are operating in the UK. Let's say the Emirates Airline and the British Airline. This is the UAE, this is the UK. If we talk about the British Airline is a resident of the here. If a resident over here, so what is the status here? Non-resident. You agree with me or no? If UK British Airline guys, I wish to see your response actively. You might agree, you might not agree, right? But say yes, no, agree, not agree. Show your participation. Show your participation. Appreciate for that. Okay, let's come up here. If the UK British Airline resident is UK and it will be non-resident over here. If non-resident over here, so this likewise the same UAE Emirates Airline, if come up here, it will be the same non-resident. Okay, this first criteria we discussed the non-resident. So now we are saying the British Airline is non-resident for UAE perspective, or any other airline, Canada Airline, whatever. But the second is the reciprocity principle. If the reciprocity principle, what is that? He's saying if the Emirates airline getting the same benefit is, what is the benefit? Not subject to tax, are exempt from the tax in the UK. So likewise, the British airline will be not subject to tax in UAE. If this country giving the same benefit to our taxpayer, of course, we will give the same benefit to their taxpayer. I believe this international transportation is very precisely we understand. And this is, I think only the small part is shown over there. And this is the understanding, hope, because we commonly receive the question, okay, international transportation is exempt, is not subject to tax. Even the companies that the student itself or the profession itself, they come up with this and they don't have this complete context in understanding. And they're insisting, how come you are saying is subject to tax? How come the Emirates airline is a reference, but they mention their name is how come it to subject to tax? Anyhow. So as part of the exempt income that we covered from here, but this is the, of course, we will cover in the next topic, that is the total 8 adjustment. And this also we discussed. So same thing that we discussed in previous, again, I'm covering on the income part. I'll just, for reference purpose, I'll go back. So taxable person, this we gonna understand now, because this we mention on next slide, right? Taxable income, we have the discussion over there, and what is the taxable and exempt income we discussed just now. Now we are coming back on the point. First two is covered. This is also part of the first, but we understand some of that. Same, the definition of the corporate tax. Corporate tax is payable upon taxable income. So this is what we're going to understand. Income. Under income will be the exempt income, taxable income, sorry, the income we covered. Now the taxable person, this one we are discussing, because this is covered. Income. The income, now the first we discuss the out of scope person. Okay, so in terms of the out of scope person, the natural person, hope you remember the previous slide discussion. Out of scope person is a natural person without trade lessons and real estate income, personal investment income. These are the out of scope. Then the family foundation, which are treated as a transparent, applied for the application and approved for the transparency. Next, we are saying the unincorporated partnership not subject to tax. Next is saying the foreign permanent establishment, election is made. Then we are saying the natural person. The natural person can be resident, can be non-resident. Now, the resident, non-resident itself is a detailed understanding and what are the applicable regulation and the criteria. Based on that, the person can be the resident or non-resident. Even the UAE local can be non-resident. And we, as the expat, we are also resident over here. And we can also non-resident over here. Now, if we are living here, working here, doing the job and business activity, but from home country perspective, we are non-resident in the India, Pakistan, and the UK, but we are the resident over here. Then is the exempt person, taxable person. Taxable person can be resident. Okay, the taxable person can be resident, can be non-resident. If a resident, subject to tax on the worldwide income, not only UAE income. This is the other point. Worldwide income. taxable person subject, we understand one of the branch in the UK is subject to tax in the UAE, but if we have the option to make the election, then we are not subject to tax. So this is the example of the worldwide income. Non-resident person, even the non-resident person, they are subject to tax on their UAE source on income. UAE source income. Again, it will be further criteria and detail how it will be impacted. But in generally, currently the withholding tax is a zero rated, but still we will see what are the uh, other income. Oh, sorry, the UAE source income. The word source is very important. If they are doing any business or business activity, even without trade license, but it's fall under the business activity, yes, is subject to tax, even is a non-resident person. Now, the next is a tax period, same as the accounting period. This is the accounting period. Here, okay, I'll just give you the understanding about the accounting period. Accounting period. If the accounting period, how it will be as per the UAE commercial law. This is very important to understand. What is the accounting period of the entity or the company? As per the UAE commercial law, company is registered as per the commercial law, and the commercial law give the option, choose the accounting period, and normally most of the such information available in MOA, Memorandum of Article or Memorandum of Association. Okay, there is a small difference in Memorandum of Article and Association. And in Aqd Tasis, if we say in Arabic, the company is formed, the company is registered based on this document. Based on this document. This is the our company incorporation, the first document as the evidence when we say company is incorporated. Okay, the company is registered. Worldwide, it is the same. Maybe the names are different, but in UAE, they add the trade license. Trade license. This is the next local compliances, but company is already in existence up to this. Company is already in existence, but local regulation, they add the word trade license as part of the further compliance. So at the outcome, we are familiar with the trade license, commercial license, industrial license, professional license, many other type of license. Anyhow, we are here understanding the okay. So now we understand the accounting period come from the UAE commercial law, and the tax period is saying whatever your accounting period treat same as a tax period. And different other part of the world, it may differ. They're saying, okay, whatever your accounting period, we have nothing to do. So then tax basis, tax period is coming up in that. But here they keep the simple. They said accounting period will be treated as a tax period. Still, some further compliances will remain there. That is the UAE commercial law that have very importance while discussing the legal status and understanding of other matters. So we discussed the first point, taxable person, taxable income. Taxable person, then taxable income. So far we covered. Now the third important fact, tax period, accounting period, accounting period. Tax period, accounting period. Anyone would like to participate and give the understanding? If they, I appreciate your participation. I appreciate your participation. Anybody? Anyone wish to, please. Guys, be active and be participative. Any further information, anything? Thanks, Abdullah, at least you. active when you're responding. I appreciate all the participants. At least say yes, no, whatever you want to say. Okay. So that tax period, we mentioned the accounting period, tax period are seen. Now, while registering the corporate tax, while making the registration of the corporate tax, there is many options are appearing that will be chosen based on that. Juridical person, LLC, private, limited liability, public joint stock company. Then the another part, the poem, place of effective management. This is incorporated outside UAE, like the company is incorporated in the UK, but effectively managed and controlled in the UAE. This also the legal person is registered over here.